Michael Burry said the silliness is back and everything has flipped upside down. Is it the time to buy? We will cover that today. I think it's important to look at the details and break it down exactly what's been happening. And then we're going to go around the world from the UK to Australia and more. I'll show you the economy. I'll give you a lot of statistics today, beginning with this. Risk on rally. Cyclicals have returned to favor in the past month. Now, while they're showing you here the stock 600, this applies to all countries. Look, around the world, this is basically the same thing. And you have to understand what's happening. The same stocks that were doing really well 2020, they're starting to do well again. Here we have it, technology right at the top of the list. But let's break it down a little bit further. Most shorted tech names have done very well, specifically since the 27th of July, day after day after day after day. And of course, you go in further and start to see which stocks specifically. In fact, you're looking at the meme stock frenzy returning, baffling Wall Street's, quote, smart guys. Bed Bath & Beyond nearly triples as retail traders pounce. Heavily shorted stocks, DE SPACs are part of a broader rebound. Looking at all of this, I have to wonder what the heck is going on because people are really desperate. Now, I wonder if they're adding to existing positions that they already hold, or is this people who missed out on the first run and are now going to get the gold? Retail traders who lurk in forums like Reddit's Wall Street Bets are back to betting against Wall Street pros and the Federal Reserve. I don't understand how they're betting against the Fed in this respect. Fighting the Fed? Is that what we talked about? Anyway, as rallies for meme stocks like Bed Bath & Beyond, AMC, show shades of last year's mania. Actually, it was 2020 was when it got crazy. But you look at this and understand that we're talking about stocks that should not be at the valuations that they are at. But just because a whole bunch of retail traders come in, and then of course, all of that data is being sold off to the high frequency traders, and then those high frequency traders are buying it up. It's not the retail traders specifically, but you look at what can be done by the machines. Outperforming the pros, retail traders are on track for the best month since January 2021 relative to hedge funds. And that's just some interesting news. But I find it funny because there's this stigma around the hedge funds. There's this understanding and knowing that all the hedge funds are bad and all the hedge funds are so wealthy and all the hedge funds this and that. Most hedge funds are terrible and they go out of business. So it's not as if they're just making billions. You hear about the stories of, this hedge fund manager or that one doing very well, but they're not all billionaires. And a lot of them do, in fact, go out of business. Now, there's one individual I've talked about many times before. You probably heard of him. It is JP Morgan's head quant, Marco Kolonovich. Now, he is, as they say here, one of Wall Street's staunchest bulls. Basically, what they're saying is he never says the market will go down, ever. Buy, buy, buy. Every week he puts out a report, and every week he says buy. All the way up, all the way down. Buy, 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 buy. Something's different. Something has changed. We'll talk about that. Make sure you subscribe because on the next video, I'm going to talk about some more stuff, but I wanted you to know this right now. Friday's report talks about that. You got the data coming in. The stock market has moved up. And he's actually suggesting right now at this time to trim stock holdings and shift the money to commodities. Why? Because if you look at what had happened recently, we had commodities going up like crazy. You remember that? Everybody does. And at the same time, we had stocks coming down. However, now we have seen commodities come off their highs and now stocks have come up. So you see, we are trying to get on the other side of the equation. Hard to time it precisely. By the way, just to be clear, he is not saying sell everything or sell a large portion. He's just saying sell some. You took some good winnings there, sell some, and now buy into things that have been sold off. That's what happens over and over again, just like when you saw all of these different meme stocks and everything was going crazy. Oh, it's never going to end. It's never going to end. And we were watching things going absolutely through the roof. It didn't take long for that to reverse. And it's always, always, always when everybody says this is never going to end, that in fact it does. And it doesn't go straight down. A lot of times there's kind of a chopping motion as, some people are getting out, but others are coming in to buy their assets. Okay, so let's basically go into the next aspect, because while we're looking at these high risk environments, we need to understand what's happening with the economy in general. The economy is truly important because it affects you directly. I'm going to talk about everything right now, but I wanted to begin by taking a look at the UK. UK economy probably entered its worst slump since lockdown. Note, not a recession. In the UK, doing the same thing as other countries like the US. Don't call it a recession. We want to measure it in a way that it's simply impossible for you to ever call it a recession. That's just the way it's going to be. When we look at this, you see what the UK has done, exactly like the US. They've increased interest rates to high levels. And of course, you just see what the economy as a whole has to slow down. I think I had an article about that, but what I note here is that you increase interest rates, consumers can't get into as much debt, and as a result, things slow down. It's a simple matter of fact. What they try to do is create this, this silly notion of a soft landing. I mean, if an airplane is falling from 30,000 feet with no engines and no wings, how is it going to have a soft landing? I mean, it's possible. It's possible. I guess anything is possible. Pigs can fly. I guess if they do some genetic modification to it. But anyway, looking at this, it just talks about the fact that the GDP for the second quarter probably shrank 0.2%. It doesn't matter. These statistics really don't matter when you think about it. What matters here is the overall, just looking at it from top down. Australia's consumer sentiment falters further on rate hikes. Again, same situation. Australia, UK, just look anywhere. I'm noticing this all over the place. And what do we see? Like, what's real? Steaks off the table. Inflation-weary shoppers are switching to chicken. And so what we see here is a matter of fact that this has been going on forever and ever. It's that if people can't afford the best cut of meat, if they can't afford to shop at the nicest store, they go down one. And then they can't afford that, they go down one. And then they keep doing this. And so their cost of living is being adjusted, but not in real terms, because they're changing. Oh, I can't afford to eat 3 meals a day, I'll eat 2 meals a day. I can't afford to eat 2 meals a day, I'll eat 1 meal a day. Oh, I can't eat that, I'll eat every other day, and so on. This shouldn't be like this, because there's enough wealth in the world to have everybody doing just fine. I mean, that's a simple matter of fact. But the way that things are designed by the central bankers, forget about blaming this guy down the street who's got a Ferrari. He doesn't have anything to do with it. It's the central banks. The central bank activities are the most important factor. And you just look at how serious things are. Look, used Lululemon yoga pants, shoppers overcome the ick factor. Inflation-strapped consumers are buying secondhand items once considered off limits, though one person's bargain is another's hard no. Now, I made this comment on Twitter saying, do you want somebody else's sweaty bum has been, and you want that on your own? I mean, I don't think that makes any sense. I would just buy a new pair that isn't from a brand name, but that's just me. Looking at this, it just shows me that inflation has picked up considerably and people have to start making hard choices. I can't choose this, I'm going to choose this. I can't have this, I can't have that. And this right here shows us the direct impact that it's having on the economy. Inflation is devastating. The companies, they increase their prices, they are not going to bring them down. Unless you think so. If you think that companies will in fact bring prices down as we see inflation recede, if you think that's going to happen, put it in the comments below and let's have a debate about that. I would really like to know your thoughts. I'm serious about this. And then we have ISM data. Now, essentially what we look at with manufacturing, with orders, with imports, with exports, all of these tell a story. And right now, essentially what we're noticing is that this is, I'll show you this really quickly. This is the 50 line, okay? So anything below this is a contraction, okay? So just looking at this. And when I see this, it just tells me that we are in this mode or heading towards it. We are heading towards a contraction. And that gives us an idea of what's happening in the real economy. In the real economy. Because you can look at meme stocks and all this. Look, risk is on today. Risk is on. Why? Because we're heading towards the end of the year. Okay, so once we get to December, by then the market believes that interest rate hikes that are going like this right now will stop. They're going to go sideways, and any form of pressure, they will start to bring this down again, and the markets will love it and they'll go up. They're simply waiting for this moment, what they call the Powell pivot. And is that going to happen? Is it actually going to turn around in this fashion? There has been absolutely no indication from anybody at the Federal Reserve, even, the most bend over backwards, Neil Kashkaris and Baileys and everybody has been saying we need the data there before we can even suggest going off what we're doing. So what does that mean? That means September is another 50 basis points. That puts the Fed funds rate at 3%. 50 basis points. I should erase that. 50 basis points. Okay? 3%. Then what happens? We get into the later part of the year. Let's say another 2 Fed meetings, even if they're both 25 basis points each. That brings us to 3.5%. That right there is significant, higher than what we saw during, post-financial crisis and all this. So we went to 2.5. So what I look at is all of this adding up to basically suck out the risk from the markets. We have not seen risk disappear at all. I said this before. Oh, it's everybody's selling. It's max fear. It's all that didn't happen at all. This drop here was very much like what we saw in 2020. That was not a crash. That was not a collapse. That was a dip. That was an actual dip. So there was an opportunity for some, but my goodness, what happened? Things changed so fast, rapidly. I mean, you think about it, those stocks, the Pelotons and the Netflix and all those companies, they did not do well over the long term. Look at even companies like Amazon. I haven't checked it recently, but it was chopping up. I mean, after its initial very good performance from like March 2020 into like June, July, it went straight up. But then it chopped along for it's what seemed like 2 years. So this is never a guarantee. You've got to watch it. You've got to keep close eye on it. And I think people should take their finances very seriously. It is very important to diversify what you have. Okay, always do that. Diversify what you have, even if you think, this is going to be the next big thing. Make sure you got some money put aside into something that is much safer, even if it's not going to return what you would like to. You want to keep your money in different places, even if it's not that thing. Okay, I understand that, if this multiplies, I'm going to be rich. I'm going to be like this guy and Dogecoin and all this stuff. We've got to be prudent. Got to be wise. Doesn't mean you don't invest in things. Doesn't mean you don't put your money places. It's just that you've got to be cautious with it. You can't just throw everything in and think this is going to be the next big thing. This is a lot to lose sometimes. Okay. Have you already subscribed? If not, you definitely want to do so right down there below. I'm going to bring you some good stuff in the next video. Definitely want to check it out. See ya. Take care.